Hi. Let's learn about Fibonacci extensions. Fibonacci extensions are a tool that traders use to establish profit targets or estimate how far a price may travel after a pullback. These levels are based on Fibonacci ratios, such as 61.8%, 100%, 161.8%, 200%, and 261.8%. Extension levels are also possible areas where the price may reverse. Fibonacci ratios are common in everyday life and nature, seen in galaxy formations, architecture, shells, hurricanes, and some plants. This is why some traders believe these common ratios may also have significance in the financial markets. The process of creating Fibonacci extensions involves choosing 3 points on a chart: the start of a move, the end of a move, and the end of the retracement against that move. Once these points are chosen, the lines are drawn at percentages of that move, projecting where the price could go next. Fibonacci retracement levels can be calculated by choosing 3 points on a chart, representing the start of a move, the end of a move, and the end of the retracement against that move. Once these points are chosen, lines are drawn at percentages of that move, providing levels to the upside or downside of where the price could go next. The ratios for Fibonacci extensions are based on something called the golden mean or ratio, which is derived from a specific number string. Fibonacci extensions are a way to establish price targets or find projected areas of support or resistance. If the price moves through one extension level, it may continue moving toward the next. The area around an extension level may be important, as the price may not stop or reverse right at the level. Fibonacci extensions can be used for any time frame or in any market, and clusters of Fibonacci levels indicate significant price areas. While extensions show where the price will go following a retracement, Fibonacci retracement levels indicate how deep a retracement could be. In other words, Fibonacci retracements measure the pullbacks within a trend, while Fibonacci extensions measure the impulse waves in the direction of the trend. Fibonacci extensions are not meant to be the sole determinant of whether to buy or sell a stock. Investors should use extensions along with other indicators or patterns when looking to determine one or multiple price targets. There is no assurance that the price will reach or reverse at a given extension level, so it's important to use other informative tools, such as candlestick patterns and price action. Here are 5 key takeaways. 1. Fibonacci ratios are common in everyday life, and some traders believe these ratios may have significance in the financial markets. 2. Fibonacci extensions are drawn at 3 points on a chart, marking price levels of possible importance. 3. Fibonacci extensions show how far the next price wave could move following a pullback. 4. Common Fibonacci extension levels are 61.8%, 100%, 161.8%, 200%, and 261.8%. 5. Extension levels signal possible areas of importance, but should not be relied on exclusively. Hope this would help. Thanks for watching.